Hi everyone, welcome back to F7 lesson. Right, today I'm focusing on topic consolidated of statement of profit and loss, but I'm focusing only in one issue, which is intra-trading, that we can relate it to unrealized profit. Okay, so I will teach you the effect on the intra-trading and effect of URP, unrealized profit. All right, and you can download from ACCA Global um, past exam question. Today I'm focusing on September 2016, question 5, section A. All right, um, just to share to you all, I'm doing an MCQ question. However, in this video, I'm not focusing on the technique of answering MCQ. I will explain you in details on intra-trading's URP, consolidated SOPL for your reference in the future. Not only for section A, you can use these videos as well as a guideline for your section C. Right? So today, before I start, I will explain to you first on what is intra-trading all about. In the rules of consolidate, all right, um, when you want to do a consolidate statement, parents and subsidiaries, you have to eliminate your intra-trading and you have to eliminate your unrealized profit as well. All right, today, so this is the explanation what is intra-trading all about. It is about parents, as either parents or subsidiaries. All right, vice versa. When parents sell goods to subsidiaries, means that it involves of intra-trading. You are doing a transaction in the group as well. That means parents sell subsidiaries, goods to subsidiaries, or subsidiaries sell goods to parents. So this considered as an intra-trading transaction. So whatever sales that occurred among in the group, all right, among parents and subsidiaries, means that you have to eliminate the value in your financial statement later. So I give an example. Parents sell goods to subsidiaries 10,000. So the effect year later, when you want to do consolidate, you have to debit sales of 10,000, all right, and credit COS 10,000 as well. Okay, debit sales mean that you have to minus your sales, credits you as you have to minus 10,000 as well. This is just an example figures to make you more understand. If subsidiaries to parent, the same effect as well. I give example, the step when after you do consolidate. All right, what I mean consolidate, parents plus subsidiaries. Example, the step, sales parents plus sales subsidiaries. But you have to see as well, when is the parent acquired the subsidiaries, because you only consolidate the subsidiaries starting you acquired until end of the year, means that you have to apportion it. All right, read the question will give you the date of acquisition and when is the end of the year. So you only consolidate the value after you acquire the subsidiaries and minus your intra-trading value. All right, not only sales, cost of sales as well. I'm focusing on statement of profit and loss. Cost of sales, parents, you plus with consolidated subsidiaries, as mentioned just now, you have to apportion it. If you maybe you have acquired the subsidiaries in the middle of the year, so you only can console half of the year only, and minus intra trading as well. Debit sales means you minus the value, credits you as you minus is here as well. So this is the basic understanding what is all about intra trading effect. Okay, it's important for you if the section later the question requires you to publish a statement of profit and loss, you don't forget to read the question details And don't forget to minus the intra-trading. We have two effects here. Not only eliminate intra-trading, you also need to eliminate the URP. What is URP all about? It is unrealized profit. And what is unrealized profit? You're focusing on the amount of the unsold stocks, either in subsidiaries position or parent position. I give an example. Parent sell just now 10,000 to subsidiaries, and at the end of the year, subsidiaries still hold the stocks balance around two, maybe 4,000. So you have to calculate the URP for the unsold stocks only. Alright? Don't worry, the question will give you the amount of the unsold stocks. You cannot do assumption here. Alright? So what is the formula to find URP? You have two type of formula, and the question will tell you either it is based on markup cost or based on margin. If markup, okay, if markup class, you are focusing on the value of the unsold stocks, you will times with the markup percent. The question will inform you, okay, divide by the markup percent plus 100%. Example, probably the question say markup 25%, means that 25% divide by 125. So you get your URP. If the question say based on margin, means that the value of the unsold stocks will times with the percent of the margin. You get the URP as well. Alright, so what is the effect? When you get your URP, you have to debit cost, because unrealized profit you have to eliminate. When you eliminate the profit, means that you will increase the cost as well. When you debit COS, you increase the cost of sales, reduce the profit. Alright, and you have to credit the inventories. This affect your SOFP financial position. This affect your SOPL profit and loss statement. Alright, so now I want to focus to apply the understanding of the calculation I've teach from eliminate intra-trading and eliminate of URP. Now we are focusing on September 2016 ACCA Global Question 5 Section A. Alright, this is a question. You have to read as fast as you can and extract the information as fast as you can as well, and you just see the keyword only. But for this video, I will not teach you technique how to answer fast, but more on the area of the knowledge, because I want you to apply for section C as well. So now, Packet Company acquires 60% of Suket Company on the 1st January. So who is Packet, class? Alright, Packet is your parents. So you have to know this is your parents. Okay, this is your parents. 60% of Suket Company. Suket, who is Suket now? Correct, it is your subsidiaries. Alright, this is your subsidiaries on the 1st January. This is your date of acquisition. Okay, and remember, in consolidate question, you have two important dates, which are the date of the acquisition. Alright, the date of acquisition. I just put a keyword here, DOA, and the year ended date as well. This is a technique of answering section A, B, or C. Important, remember class, remember students, in the important date here is the year ended. When you know your year ended, they will guide your answer until this period only. Okay, this is an important date, 31st March 2007. So I try to who's your parents? As you can see, is your Parker, and who is your subsidiary just now? Is your Suket. So as you can see here, when is your DOA here? DOA is on the 1st January 2007, and your year end. Oh, this period is only for 3 months. As I mentioned just now, you only can consolidate based after you acquire until your year end, means that you have to apportion it. Okay, I will explain further details on it. So this is a timeline. I start January, I acquire subsidiaries, subsuket, but I have to close my account at the 31st March 2017. 3 months only you can consolidate. Why? Alright, now the question focus on cost of sales only. So you are focusing the effect on the cost of sales because the question required you consolidate cost of sales. Okay, now this amount extract has been taken from statement of profit and loss. Remember, whatever statement, either profit and loss or statement of financial position, it is 1 year. This is a 1 year data. Alright. So first step you have to do is your parents amount you can take as a total because this is a group parent statement. Alright. 70. Can you plus it 480? Why you cannot plus this 480? Because this 480 is for 1 year. You only start to acquire Suket is on the 1st January 2017, your date of acquisition. And your year ended is 31st March. You only can console for 3 months. Okay, as you can see here. Alright. So, Parker Company consistently makes sale of 20,000 per month to Suket through the year. Oh, Parker is your parents. You make sales per month to Suket. Parker is a seller. Suket is the buyer. Means that this is an intra-trading transaction because you sell to your subsidiaries. 20,000 per month. So how many can I know the amount of the total sales? This we call as intra-trading value. Your amount, your sales, 20,000 times 3 months, 60,000 is the value of your transaction between parents and subsidiaries. We call it as an intra-trading. Once you get your intra-trading, so I can say this is your intra-trading transaction because you are selling goods to your own subsidiaries. Okay, this is your intra-trading value, which is it is 60,000. Okay, so I get my amount intra-trading at the year end. Suket company have 20,000 inventory. Ooh, what indicator is this, class? As you can see, Suket company, the buyer still hold the inventory in his position. Correct. This is the unsold stock value. Remember, as I mentioned just now, as I mentioned just now, when you want to calculate the URP, you must focus on the amount of the unsold stocks of the buyer. Who's the buyer? Correct, class. It's a Suket company is the buyer. So now you still have 20,000 in your position. So the amount of unsold stock is 20,000. Using what method? You have to know. Oh, markup cost of 25%. So it's a cost of 25% on the sale of Suket company. So you're using a markup cost. So automatically you are using this URP formula. You see why you're using this? Because the question requires you to use markup on cost. Right, sorry. So can we calculate together how to get the URP? 20,000, you see, the unsold stock value. This is the unsold stock value. You times with your 25% markup, as mentioned in the formula. You divide by 25% plus 100%. You will get 4,000. So this is your URP. Now, you get this two figure. What you have to do, the effect will come. What I mean effect? debit sales, credit COS, but question you are focusing on COS, so I'm focusing on CQ. You have to credit COS. So what is your step here now? You see, cost of sales parent 710 plus is 480. Can you do that? No, good. Remember what I teach? 480 times 3 over 12 because you only acquire 3 months only. So how to calculate 710 parents, you plus is 480. Can you do that? No, because it's a 1 year basis. So you have to times with 3 over 12. Your subsidiaries. This is a consolidate method. You plus parents amount plus subsidiaries amount, but you have to see either you have to apportion it or not, because you only can consolidate after the date you acquired until end of the year. And remember I said you have to credit COS. You have to minus your intra-trading, which is 60,000 that you get just now, the full amount. And don't forget to the effect of the URP, which is you have to debit COS. When you debit, you have to plus the 4,000. So the value that you will get later when you use your calculator, you will get 774,000, which is C. The answer is C. This is the way how to treatment on intra-trading transaction. Means that you have two effects which are focusing on the intra-trading, debit sales, credit COS. You have to minus both sales and COS. For URP, don't forget you have to debit your COS, and you have to what class? Another one is you have to minus 4,000 at the inventory at CSOFP. But now you need to do that because I'm focusing on statement of profit and loss account. Alright, so that's all topics that I will cover in my video on consolidated statement of profit and loss account, that focusing on sales and cost of sales. But the question now only cost of sales, but I hope you can understand as well how is the effect on the sales amount and COS as well, cost of sales. All right, but before I end my lesson, just to share to you what, give a try on question 6. These topics under accounting estimate and accounting policy, you have to differentiate these two. What is accounting policy? What is accounting estimate? I will cover this in my next lesson videos, but just give a try. Depreciation method. The company decide to change its depreciation method. Oh, he want to change the method. So what type of changes we apply here? It is accounting estimate. Oh, you got C, accounting estimate. You got D, accounting estimate. You can use an eliminate technique. When you see an accounting policy cannot prospectively. This is totally wrong. Accounting policy is only retrospectively. So you have one, you have first choice, one. Another one is accounting estimate cannot be retro. Accounting estimate is prospectively only. So this is the way how I want to eliminate my wrong answer. A is wrong, A is wrong, C is wrong as well. Okay, so now depreciation under accounting policy or accounting estimate. The answer here is D, accounting estimate. This is just a refresh. I will cover in detail how to differentiate between accounting policy and accounting estimate in my next lesson videos. So at the end, the answer for C is D, estimate, and must be applied prospectively. Means that you no need to adjust your opening balance. Okay, So don't worry, we cover this in my next lesson. Alright, that's all on the consolidated statement of profit and loss. Basic understanding. Probably you can apply this understanding not only section A, B, and C as well when you do publish statement of profit and loss. Alright, that's all for today. Thank you.